माननीय सदस्य। नेक्स्ट माननीय सदस्य श्री एस निरंजन रेड्डी, 9 minutes.
Thank you, sir, for granting me this opportunity to comment on the proposed budget. Sir, I recognize that this budget is being considered in times of significant global pressure of global headwinds, trade volatility, and reducing world global trade business. Sir, I find that the budget exhibits resilience. It shows cautious maturity. Sir, while in itself this is appreciable, in my view, it falls slightly short of being congratulatory. Sir, I wonder if the budget exhibits over-cautiousness, but sir, I am an optimist. Sir, I may believe that maybe the Honorable Finance Minister may have reserved the best for the 10th successive budget which she will present next year. Sir, I look at the current exercise that the government is doing, including budget being a part of that exercise, under two heads. One is, sir, the policy processes and the policy reforms. If I have to mark the government on the policy processes, sir, in terms of the improvements they have done to the processes, I might mark the government a 9 on 10. It has done exceedingly well in improving all the small processes that will ensure that the system moves forward. Sir, if I have to candidly mark the government on policy reforms, sir, I must say that in my assessment, the government would get 5 on 10 because the government has just got it started on major structural reforms. Sir, the fact that we have made these processes in an improved manner has shown a creditable growth rate of 6.5 this year to 7%. But sir, given India's dividend time period that we have, India needs to grow at a rate of 8%. So this is possible if we unlock India. We need to unlock India's potential, and sir, we need to unleash India. Sir, I have 3 suggestions for the Honorable Finance Minister with regard to what are the areas that I find that the government may need to work more zealously for bringing in this unleashing India. So one, I find that we are terribly short on contractual enforceability and the necessary legal reforms for that. So number 2 would be unlocking India's immense gold potential. It's all locked up in households. India would need to do something. So the third area that I wanted to give a suggestion to the government was on tackling fiscal discipline. So first, on contract enforceability. Sir, while we gloat about the fact that we are the 4th largest economy and heading towards the 3rd largest economy, which is creditable by the large numbers that India possesses. Sir, in contract enforceability, India ranks 163rd out of 190 countries, sir. Sir, a contract enforceability in India takes 1445 days, which roughly corresponds to 4 years. Which means if I have a contract with a party, if a contract is being breached, if I have to enforce it through the legal systems in India, it takes 4 years and I lose 31% of my claim value when I'm enforcing a contract in India. Comparatively, sir, Singapore takes 164 days. OECD countries average take about 589 days. So this directly results in loss of investments. The cost of capital goes up. MSMEs have a large difficulty in recovering the monies that are due to them. So the economic survey of 25-26 says that 8.1 lakh crore rupees of MSMEs are locked in because they are not able to recover the money because of the contract enforceability difficulty. Sir, if we are able to improve our contract enforceability, the Honorable Finance Minister may note just this one single thing will increase GDP by 1.5%, sir. 1.5%, our growth rate can go from 7 to 8.5. Sir, we don't need to look at large reforms for the purpose of ensuring this contract enforceability. Just a small amendment in one section of CPC which deals with costs. If we provide in a commercial contract, any party which is suffering a decree because it has breached a contract must pay interest of 24% to 30% with half yearly rest. We have a similar provision in MSME. Sir, that by itself will deter several people, because today, sir, in India, what happens is, if I have to pay 10 crores to a party under a contract, sir, if I keep 10 crores with me, the court is awarding interest of 6% and 9% after 7 years. If I return the 10 crores, I go to the bank and take the loan from the bank, I have to pay the bank 14% to 15%. So, sir, your system is incentivizing me to break a contract, not pay the money, pay lesser interest after 8 years through court, rather than borrow money from the bank and pay a higher interest. Sir, this is something that can be easily achieved. Sir, because I have two other areas to cover, my lord, one of the points I wanted to touch was on legal reforms, but I will leave it. So the second issue that I wanted the Honorable Finance Minister to consider is unlocking gold potential. Sir, India has 30,000 tons of gold. This translates to 420 crore lakh rupees. Sir, India's GDP is 360 crore lakh rupees today. Sorry, lakh crore rupees. Sir, that means the India's gold potential is 1.25% India's GDP. If you are able to unlock this potential, even if you are able to financialize or monetize 1% of the gold potential, that itself will increase GDP by 1%. Sir, we have made some efforts in the past that did not succeed. Sir, because the architectural problem was, India was looking at gold mobilization versus gold financialization. Sir, we have an example of Turkey, which has done a creditable job by having schemes like gold-linked financial savings account. Someone can deposit gold, it will be treated as a savings account. That money can be used by the parties, and if at all they want to recover the same gold ornaments, they can recover it. So the Central Bank of Turkey says certain banks can hold a portion of the reserves in gold. So this has encouraged banks to have gold loans and take gold and give out money so that people have the liberty. This will help the MSMEs in great measure. So very quickly, sir, India came up with an electronic gold receipt mechanism. There is a small GST problem. So 3% would be paid when someone imports gold or someone buys gold. If I convert it to an electronic gold receipt, sir, I do not get the input tax credit. It is only when the trading happens, eventually someone wants to convert the gold receipt into physical gold, the input tax credit is being allowed, which means today no person wants to convert physical gold to electronic gold receipt. Sir, the last of the suggestions I have, sir, each of these I have more points to make. I will write to the Honorable Finance Minister separately, but I'll be mindful of time. The last point I have, sir, is the fiscal path that the central government has followed. While it is commendatory, I understand that the pace has not kept pace with the previous years because of the global headwinds. So FRBM limits are limited to 3%. I want the central government to practice what it is preaching to the states. If the states are now asked to maintain their fiscal limits at deficit at 3%, I want the central government to move fast. Sir, please see the capital cost. Yes, sir, I'm mindful. I'll be trying to finish. Lordship, you may please take your hand off the belt. It gives me tension, sir. Sir, India's 10-year bond yield today, my lord, sir, it gives 6.7%. India has to pay 6.7% interest, when Indonesia, which is similarly credit rated in India as India, pays 6.3. So India's cost of capital is 0.4% more. Sir, this is because the states are increasingly becoming fiscally irresponsible. Sir, we are in a council of states. I am speaking candidly, sir. I say all states have to become more fiscally responsible. The central government will have to incentivize. Sir, the Finance Commission, sir, can I ask for 30 seconds more? So the Finance Commission in 16th Finance Commission has said that the tax and fiscal efforts which were being given 2.5% weightage earlier has been done away with, which means today the new Finance Commission does not give a weightage to a state which is being fiscally prudent. Sir, I would ask the central government to make some arrangements under the SASKI scheme to incentivize states which are being fiscally prudent. Thank you so much, sir, for the extra time.